Page 94, the Private Eye Podcast.
Hello, and welcome to a new series of Page 94, the Private Eye Podcast. My name is Andrew Hunter Murray, and this week, in our first episode, we are going to be looking at accountancy. Don't switch off, we are also going to a party. So, Richard Brooks is Private Eye's tax correspondent, and he has just written a book all about accountancy called Bean Counters, The Triumph of the Accountants and How They Broke Capitalism. Thanks to having someone on the inside, we were able to go to the launch party for this book, so I spoke to Richard there and asked him what's going on with accountancy. I also managed to speak to Margaret Hodge MP. She's the MP for Barking, and for many years she was the chair of the Public Accounts Committee, which looks into exactly the sort of financial dodgy dealings that Private Eye likes to cover. So you'll hear her in a minute. First of all, I asked Richard exactly what the heck is the trouble with accountancy today.
The trouble is that in the last 50 years or so, it's become very commercialised. The idea of just checking the numbers has turned into manipulating the numbers, flogging as many services as you can to the people who should be telling you the true numbers and whose numbers you should be checking. So the whole thing's become corrupted in the broadest sense. And I guess that's why the subtitle to the book is The Triumph of the Accountants and How They Broke Capitalism, because you see capitalism broken, you see the tax avoidance, the money laundering, the financial crime, the fiddled figures, and that's all because accountancy's become broken.
A lot of people think of accountancy as being the dull and staid version of the high-powered capitalism that we've seen recently. We don't think of it in the same category as casino banking or any of the fancy, credit derivatives,
exactly.
Credit default swaps, all of this stuff. And you're saying that accountancy's kind of fallen in with that crowd and has become a bit less dull?
It has, but it's fallen in. It's become part of the system. When I talked to one of the partners in one of the big four accountancy firms about the financial crisis, he said to me that, well, all of us in the system should have done better. And what struck me about that was that he was in the system. He saw himself as being in the system. They shouldn't be in the system. They should be checking the system. They've been guilty of the same excesses as the bankers, for example, but they haven't really been held accountable for it. They've sort of hidden in plain sight. They're there in their grey suits. No one thinks they're that interesting or that newsworthy. So they really avoid scrutiny. That's their great skill. I mean, I think David Attenborough would have a field day with the accountants, probing how they survive any crisis.
Margaret, you and Richard have worked together on various matters to do with tax and accountancy. Can you tell us a bit about that?
He's been one of the most valuable advisors I've had in trying to uncover all the wickedness that goes on in among the very wealthy and the big corporations in avoiding, evading tax or in laundering dirty money. If there's ever I'm not an accountant by training. I sort of got into this whole issue of tax by mistake rather than intention, so there's lots I don't understand, and every time I come across a new tricky issue which is deliberately made incomprehensible to ordinary politicians like me, Richard's my first port of call to sort of get to understand it. And of course I've used a lot of the stuff that you printed in Private Eye to pursue my campaign on a fair and just tax system. Actually, Private Eye started it all for me, so Richard's story, I've forgotten that, but Richard's story on unravelling the sweetheart deal on Goldman Sachs was really where I came in, because we were having a really boring session holding HMRC to account, and I had a very thick briefing paper from the National Audit Office, and I thought, I don't know how I'm going to get anything interesting out of this, and I just happened to read Private Eye. And Private Eye was full of the sweetheart deal, so we launched in asking questions of the head of tax at that time on the sweetheart deal in relation to Goldman Sachs.
Thanks to Dame Margaret Hodge there, putting herself firmly in line for the Order of the Brown Nose. After the party was over, I caught up with Richard back at the ranch in the Private Eye office, and I started off by asking him how accountancy is traditionally supposed to function.
Most of them make most of their money from auditing, checking that companies have prepared their accounts properly. In most cases, they meet the standard of giving a true and fair view of the company's affairs. Now, these four firms...
The big four?
That's right. These four not so much little piggies. These 4 big piggies went to market, and they no longer are mainly auditing firms. They were, but in the last 50 years or so, they've become much more commercial. And they now make most of their money from selling other services, often to the same companies that they audit.
So it's KPMG, Ernst & Young?
Now called EY.
EY, sorry.
Keep up.
Who else is there?
Deloitte. And PricewaterhouseCoopers.
Yes.
Or PwC to those of us in the know.
Okay, and these 4 have a huge amount of the market captured in terms of doing audits.
Yeah, in terms of the value of companies that are out there,
right?
They more or less do it.
So if you're a big bank...
Yeah, you're audited by one of those big 4. If you're any company in the FTSE 100, you're audited by one of those big 4.
Every single company
in
the FTSE 100?
Every single one in the FTSE 100. About 98% in the FTSE 350. They've got it stitched up.
They've cornered the market.
Yeah.
Where do you get problems?
That's a problem itself, that there isn't sufficient variation. It becomes difficult for companies to change. And really, you ought to be changing who's checking up on your books fairly often.
Okay.
But for various reasons, there's actually even less competition than the 4, because quite often when a big company has to choose an auditor, there are a number of reasons why a couple of them aren't suitable, and you're really down to 1 or 2. There's an even deeper problem, really. There's just a core conflict between earning money from somebody and therefore wanting to keep that somebody as a client, whilst at the same time supposedly checking they're doing everything properly.
So you can't really say, look, your balance sheets are completely crooked. There's no sense here. You've only got about 6 months to go as a company. Presumably that won't get your contract renewed. They'll go to one or the other.
Well, that's exactly what you should be saying sometimes. Right. But, of course, when you're earning so much money and it's going to cause so much disruption to that company, it's going to cost you a big client, then it's tempting to listen to the excuses to say, yeah, okay, you'll be all right for a few more months. yeah, okay, we'll tell the stock market you're doing fine.
Can you give an example of this?
Carillion
is
a good example of this.
Carillion, enormous firm which dealt with loads of outsourced services.
Yeah,
which is pretty vague, but they were running an enormous amount of stuff.
Yeah, everything. Prisons, building hospitals, all sorts of things. They were called Tarmac a while back, but they became Carillion, which sounds better. There's always a sign to look for, a trendy name.
Well, it rhymes with million and billion. It implies wealth. It's quite good.
A Carillion.
That's how much have you lost? A Carillion.
Yeah, that's a measure of a huge write-off. Well, they were running all kinds of services, building hospitals, on pretty narrow margins, which meant that they weren't necessarily making profits, but they said they were. Because these were long contracts, you get into some really tricky questions about how you value those contracts. If you say they're really worth a lot of money, then you've made profit, even though you're not going to make that much money. So that's the kind of thing that Carillion was doing. It was claiming to be making more profit than it really was.
Okay, so enter the auditors, who presumably say, no, you haven't recognised all these problems.
Yeah, they asked 1 or 2 questions and were pretty much fobbed off.
Who was doing the
auditors were KPMG.
Okay.
They issued clean audit certificates, as they're called, while the company put out very healthy profit statements. But within a few weeks, it said, hang on a minute, we found out we haven't really got all this money.
Right, and as a result, of course, we know from the headlines earlier this year, Carillion goes bust.
Other people have to cough up for huge pension liabilities.
Okay, so that's an example of what you would argue as being auditing, destroying the overall health of the financial ecosystem. You know, there was a safeguard in place and the safeguard's not working.
Yeah, the safeguard doesn't work. It's been kind of corrupted.
And you think this is a case across the industry?
Yeah, and they're all pretty much on a similar level. I mean, when you see the effects of this are when you get what some people call systemic problems, where it's more than just one company, where it's some feature of how business is being done. The classic recent example was the financial crisis. Banks were claiming to have profits that they didn't really have. There were similar reasons for a number of banks. They'd made loans that were going bad, but they weren't admitting they were going bad. They had these toxic products on their balance sheet that nobody was looking at carefully enough, or certainly the auditors weren't looking at carefully enough. But they were all doing pretty much the same thing. So you found a number of banks, none of them admitting that, hang on, we're in trouble. And that was perhaps the most recent major failure of accounting and auditing.
So has anything substantial changed since the crash?
Very little has changed. The accounting rules themselves have been tweaked.
Yeah.
That won't make a huge difference. There'll be another reason for some sort of financial vulnerability soon enough. And there were one or two rules changes to say that companies had to change auditors a bit more often. But they can still work for the same company for 20 years. There were proposals from the European Union to really come down hard and break up the firms, stop them providing consultancy services as well as auditing. But they were resisted. There was a lot of lobbying in Europe, and those were not pushed through.
But there has been a parliamentary attempt to break up the Big Four, and this is something you've been writing about.
It's mooted. A couple of parliamentary committees looked at Carillion, and they've said that the government needs to look at the accounting system again, that the competition regulators need to have a close look, with a view possibly to breaking up the Big Four.
You're not sounding very optimistic about the prospect.
No, I'm not. This happens sort of periodically. You get these calls. But these firms are incredibly influential. You know, they're right in the heart of government. They have been for decades.
What does that mean, they're in the heart of government?
Well, they're performing a lot of government services. They're advising the government on how to set up the health service, for example.
And this is where we get into the other thing that you're interested in, which is the other services offered. So we've talked about accounting, we've talked about auditing, but we haven't spoken about this sort of consultancy soup that goes on.
Yeah, this is the big part of the picture. In the UK now, these Big Four supposedly accountancy firms make only 21% of their income from auditing. The rest is from advisory services or consulting. So they're not really accountancy firms anymore. They're providing advice to the government, to other companies as well.
It's quite a nebulous thing, isn't it? Providing advice. It's quite a hard thing to get a handle on. I wonder if that's possibly why the problem hasn't really been grasped before now. Well, it's because it can cover a multitude of sins, can't it?
Yeah, the great thing about consultancy is, if you really want to get a good job, Andy, you become a consultant because you make a lot of money from it and you're not responsible for anything. You've only ever given advice. The person you've given the advice to takes the decision. So you have all the upside, all the money, none of the downside when it all goes pear-shaped, as it often does.
The last time we spoke, you advised me to go offshore. A bit worried by the advice you're dishing out.
I've got high hopes for you, Andy.
Okay, so you don't really have the responsibility, but you do have the advantage of the work. Okay,
that's right. I mean, you look at some of the major public policy developments now, like, for example, energy policy. We've written quite a bit about the nuclear industry, and a huge amount of the government's advice or analysis on how to shape its nuclear contracts and so on, and whether to build a new generation of nuclear power stations has come from KPMG.
Who are not the people I go to if I wanted to build a nuclear reactor. My instinctive thought wouldn't be to turn to the accountants. Obviously, you've got to pay for it, I suppose.
You're out of touch, Andy, because they are the place where the experts are. You see, they're so big and they pay so well that they can recruit almost whoever they like.
So they hire a nuclear scientist.
Yeah. They've got engineers, they've got economists, they've got accountants, they've got competition specialists. So they've got everything that you would need. And in fact, when I looked at how they got their big contracts with the government on the Hinkley Point C, which is the massive nuclear power station being built, they made a great thing about how they were effectively a one-stop shop for every service that the government could need. And of course, they also work for the company that gets the contract.
So, hang on, that's amazing. I mean, that sounds extraordinary.
Not to me, it isn't.
Okay,
this isn't too unusual.
But they're working for both sides of a deal.
Yeah,
advising both sides.
Yeah,
I mean, I would presume that there's some kind of conflict there.
There's a big one.
Yeah.
It's not the only one. Do you want another one?
Sure.
The chap who was in charge of energy policy, making the nuclear decisions at the Energy and Climate Change Department when the Hinkley Point C decision was made, left and went to work for KPMG. Having given contracts to KPMG for advice, then went to work for KPMG. He works at KPMG now as a senior partner. He's still on the government's books. He's on a 5-year government career break at KPMG as a partner on hundreds of thousands of pounds a year. Normally a move from government to a private company or a firm like KPMG involves applying to an advisory committee for clearance. To say they always give clearance, but you have to go through this process.
Are we talking about a COBA?
A COBA.
The Advisory Committee on Business Appointments. Yes, we've spoken about them before.
Yeah. I think on this one, even they might have said, hang on a minute, you've just given KPMG a load of contracts and now you want to go and work for them. But they got around that by making this move not an actual job move, but a career break. This is the other thing that the accountancy firms are really good at, is finding loopholes.
Loophole you could drive a bus through.
Yeah. Well, the KPMG slogan is cutting through complexity.
So what's the answer? What's the prescription? There's normally one. You know,
the prescription is, if we're talking about having a good accountancy and auditing profession, the answer really is that the firms that do that should just be accountants and auditors.
Right.
So they shouldn't be allowed to do consultancy, full stop. Never mind whether it's for the same client or a different client, because they have the wrong priorities at the moment. And when it comes to the really important institutions and companies like the banks, the ones that can wreck the whole economy if they fail, then I think that it's time to end the idea of private auditing for profit, because it's just full of the wrong incentives. And it's impossible to ask people to audit really rigorously if their living depends on that client not going down.
Yeah, of course.
So I think in those cases, the auditing should be done by a public body as part of the whole regulatory setup.
But it's sometimes public money, for example, that's being spent on this and maybe being wasted.
Yeah, and we need to scrutinise that a lot more than we do at the moment. I looked at one case involving PwC. They advised St Bartholomew's Hospital on this country's biggest hospital PFI scheme that was costing the trust about £120 million a year, giving them a deficit of 50 million or so. That was going on for years. They were a complete basket case. And then they needed some what they call turnaround advice, and no surprise for guessing who the advisor on that was.
PwC.
PwC again, yeah. And they also, not only did they sort of cash in on their own cock-up, they then sold the hospital what they called a sustainable operational efficiency and improvement programme. Just the people for that, for which they subsequently won a Management Consultancies Association award, which they could then plaster across their publicity and prove how good they were for the country's hospitals.
The Brass Neck Award.
Yeah. So that's how consultancy works.
Wow. I think I will become a consultant in that case.
Congratulations.
Great.
You got the job.
Richard Brooks. Now, we're going to turn to the fourth most famous Jeremy in the UK.